Now we move on to income tax because we have to talk about income taxes. It is a main topic. Firstly, we'll talk about what is income tax, what is corporate tax. Then we will deep dive in income tax. So the tax is paid by the taxpayers other than companies registered under company law in India on the income earned by them. So if you are working somewhere, you are earning some income. If you are providing some services, you are earning some income. So you will pay income tax. But if your company that is being registered under company law in India, you won't be paying income tax. There are taxed on the basis of slabs at different rate. So this type of tax system is called progressive tax system. You must be knowing that someone who is earning 10 lakh per annum is paying different amount of tax compared to someone who is earning 1 crore per annum is paying higher amount of tax. So we are basically this is called as progressive tax system because the one who is earning 10 lakh per annum must be paying lesser amount of tax and the one who is earning 1 crore rupees is paying higher amount of taxes. So this is called this is the progressive tax system used in income tax, and the companies does not fall under this category. For them, there is corporate tax. This type of tax is paid by companies registered under Company Act in India. So we have Company Act 1956, Company Act 2013. So this type of tax is paid by the companies registered under Company Act in India on the net profit from its businesses. We're not talking about gross profit, we are talking about net profit. So on net profit, they have to pay the taxes. It is taxed at a specific rate as prescribed by the Income Tax Act, subject to the changes. So this type of tax system is called proportional tax system. We are not talking about progressiveness. We are talking about the proportional basis. If you have earned specific income, so you will be taxed at a specific rate prescribed by this act, and these are subject to changes because every year corporate tax can remain same, can go up, can go down depending upon the Ministry of Finance whenever they present the budget, right? So this is about the corporate tax and income tax. Now we'll talk about income tax. So, income tax is a tax levied on the total income of the previous year of every person. Now, we are talking about income tax. We have to remember this that you will be taxed for your total income in the previous year, right? So, income tax is a tax levied on the total income of the previous year of every person or every SSE. SSE would be the better term, not the person. So, every person whose total income of the previous year exceed the maximum amount which is not chargeable to income tax is an SSE. So every person, we are talking about the differences between a person and an SSE. So basically, every person whose total income of the last year, the previous year, exceeds the maximum amount which is not chargeable to income tax. If that exceed, let's suppose the tax bracket starts after 3 lakh 50 rupees, 3 lakh 50,000 per annum. So if your income exceed 3 lakh 50,000 if your income exceed 3 lakh 50,000 in the last year, you will be charged to some amount of tax depending upon how much you have earned more than 3 lakh 50,000, right? And chargeable to income tax in the assessment year. So assessment year is the current year and the previous year is the one where you have earned that income, right? At the rate or rates described in the Finance Act for that relevant assessment year. So for that relevant assessment year, your Finance Act have defined what will be the rate or rates of taxes. His total income will be determined on the basis of residential status in India. So this is another topic that we have to touch upon. Not today, but yeah, probably in the next class. Residential status in India. Very, good topic and quite confusing for the students as well because and you can definitely expect some MCQs on residential status of a citizen. So income tax is levied on the total income of the previous year of every person whose income exceeds the maximum amount, right, which is not chargeable to income tax. And then we are talking about, like, let's suppose I'm in 2022, and 2022 we have 2022 2023, right? So this is the current assessment year, and we will, chargeable to tax in the previous year. So previous year is 2021 to 2022, right? So, and year at the rate or rates described in the Finance Act for the relevant assessment year, his total income will be determined on the basis of residential status in India, right? So his total income will be determined on the basis of residential status. Let's suppose if he is a citizen of the country, ordinary, non-ordinary, so it will depend, right? So this is all about income tax. Now we'll move on to, there is another thing that we have to touch upon. So in other words, income tax is levied in India in the following manner. So income earned by every person is chargeable to income tax if it exceeds the maximum amount which is not chargeable to tax. So the first condition is you have to make sure whether that person is a normal person or an SSE whose, you know income exceeds the maximum amount which is not chargeable to tax. It means every person who is liable to pay tax if its total income is beyond the exemption limit. It is chargeable to total income of the previous year but is taxable in the next following assessment year at the rate applicable to such assessment year. So we are talking about, we have to pay for the previous year taxes, but in the following assessment year at the rate applicable to such assessment year. However, there are certain exceptions to this rule. We'll talk about the exception in later class because there are so many exceptions. But before that, we need to, know about certain definitions, and only then we can know about, the certain exceptions to this rule. So this is about the income tax basic. You need to know the rules. You need to make sure that the person. You need to define the difference between the person and SSE, and you have to make sure that what to define the residential status of that particular citizen. That is very important. And the last thing that you have to make sure that income earned by every person is chargeable to income tax if their maximum amount is not chargeable to tax if exceed the maximum amount, right? So, and the difference between previous year and assessment year, I hope it's clear what is the difference between previous year and assessment year. The previous year, and if we talk about, in our case, will be 2021 to 2022, and the assessment year will be 2022 to 2023. So this is about income tax. Now, income tax is charged at two rates: normal rate and special rates. So normal tax rates are fixed up by the Annual Finance Act, but special rates are given in the Income Tax Act. So we are talking about on which rates income tax is being charged. So income tax is charged at two rates versus normal rate, and then there is special rate. So from where do we get the normal rate? Normal rates are being fixed by the Annual Finance Act that is being presented in the budget session, right? But special rates are given in the Income Tax Act that are being already been mentioned, that are being going on for a while. Tax is charged on the total income computed in accordance with the provision of income tax, right? So we are talking about the tax. Tax is charged on the total income computed in accordance with the provision of Income Tax Act. Total income of a person is determined on the basis of his residential status in India. So you have to make sure that if you're talking about the total income of a person, residential status will definitely come, right? So firstly, if you have to, like, basically if you have to classify residential status, then one is resident and then there is non-resident, and then the resident is further bifurcated into ordinary resident and non-ordinary resident. So there are few days, the number of days that has to be followed, that they have to live in the country. In our example, India. So from on that particular basis, we define resident and non-resident, and there are so many rules that are actually there associated with it. So I'll touch upon that in the next video because that will take a lot of amount of time. Now moving on to the definition. First thing that you have to know, person, that is mentioned in section 2 subsection 31. So income tax is levied on the total income of the previous year on every person. So is every person here means an individual. No. Right. So if we're talking about income tax is a tax levied on the total income of the previous year of on every person. Now the term person includes an individual, Hindu undivided family, association of persons, body of individuals, a firm, a company, etc. So now what basically happens if I talk about income tax to someone who is not from commerce background, and if I tell them that income tax is being levied on every person, so they'll think every individual. But according to the Act, Section 2, subsection 31, it means person includes an individual, Hindu undivided family, the concept that we are most familiar with. Then there is association of person. Then there is body of individuals. Then there is firm, and then there is company. Right. So these are the few, uh, you know, uh, few references that are being taken as person included. And now, if we have to talk about the first thing, that person includes individual. That individual could be me, Hindu undivided family. Then there is firm. Firm could be limited liability partnership, and then there is company. Company could be domestic company, a foreign company. Then there is body of individual. Then there is association of person. So association of person, like wherein two or more person comes together for the purpose, when the purpose is to earn profits and without any contract. So that association of person, right? So the, this is all about the persons, the person definition, and you have to remember what all comes under the person definition, because you can definitely expect an MCQ wherein left hand side everyone is mentioned, and then on the right hand side you have to pick the right one associated with that particular definition of person, right? So these are all the components, so you have to make sure that you are picking up the right component, right? So this is about the person definition. Now I'll quickly just revisit what is a SSE. So, according to this Act, Section 2, Subsection 7, an SSE means a person who is liable to pay any tax or any sum of money under this Act. That could be interest, penalty, etc. So, under the Income Tax Act, it's not that your income should exceed always, only then you will be categorized as SSE. If even if you have to pay some interest or some penalty, even then you will become fall under the category of SSE, in respect of whom any proceeding under this Act has been taken, such as the amount of refund due to him, the income of other person in respect of which he is assessable, who is deemed to be SSE under the provision of this Act, who is deemed to be an SSE in default under any provision of this Act. So these are all the criteria of defining an SSE. When I previously talked about an SSE and the difference between person, we didn't touch upon the other things. So this is all about the other things that we have to remember. So if anyone who is coming under the provision of this Act will also be called as an SSE, who is deemed to be SSE in default. So if you are, coming as an SSE just because of the definition of this Act. Now, what is the difference between deemed SSE? What is deemed SSE? So a person is deemed as an SSE for some other reason. So he is not an SSE, like they are not naturally an SSE, but they are deemed to be an SSE now. When a person is died, his legal representative will be treated as deemed SSE for the income of the deceased person on which tax has not been paid by deceased person before his death. So someone who has died, who was an SSE, now their legal hire will be then SSE will be deemed to be an SSE because uh, their parents didn't pay taxes before they died. So the agent of a person who is non-resident, someone who is not residing in our country, and their agent who is residing in our country will be considered to be an SSE. SSE in default, where a person is responsible for paying tax either on his income or other incomes under this Act, but fails to do so, is called SSE in default. So someone who was obligated to pay the tax, who had to pay the tax but didn't, and they defaulted, would be called SSE in default, right? So this is all about SSE, the definition of the persons for this video. In the next video, we'll touch upon the residential status. We'll talk about the concept, And if you're liking the content that we are providing, please do leave a like, and make sure if you have any doubt, you write up in the comment section, and do leave us up to the channel and hit the bell icon. So whenever I come up with a new video on this unit, you will be notified for that. And there are other units that I have covered, so you can give it a look as well, and start preparing for your examination. So that will be all for today's class. We'll meet you in the next video.